Mastering throughput accounting. Ignoring throughput is a recipe for business disaster. Why does an understanding of throughput, which is defined as the rate at which a system generates money through sales, and its calculation, which is typically expressed as the ratio of total sales revenue to total operating expenses, play a crucial role in making informed business decisions? In the context of throughput accounting, understanding throughput is vital for making informed business decisions. Throughput, defined as the rate at which a system generates money through sales, is a critical performance metric that provides valuable insights into a company's ability to generate revenue. The calculation of throughput, typically expressed as the ratio of total sales revenue to total operating expenses, offers a clear and concise picture of a company's financial performance. This metric plays a crucial role in informing business decisions in several ways. Firstly, throughput highlights a company's ability to generate revenue. By calculating the ratio of total sales revenue to total operating expenses, businesses can identify areas of inefficiency and optimize their operations to maximize revenue generation. This is particularly important in today's fast-paced and competitive business environment, where companies need to be agile and responsive to changing market conditions. By understanding their throughput, businesses can identify opportunities to increase revenue, reduce costs, and make adjustments to their operations to improve their financial performance. Secondly, throughput provides valuable insights into a company's profitability. By examining the ratio of total sales revenue to total operating expenses, businesses can identify areas where costs can be reduced or optimized. This is particularly important in industries where profit margins are thin, and small changes in costs can have a significant impact on profitability. By understanding their throughput, businesses can identify opportunities to reduce costs, improve efficiency, and increase profitability. Thirdly, throughput is essential for evaluating the effectiveness of business decisions. In today's complex and dynamic business environment, companies are constantly faced with decisions that require careful consideration and evaluation. By understanding throughput, businesses can evaluate the impact of their decisions on their financial performance. This enables them to make informed decisions that maximize revenue generation, reduce costs, and improve profitability. Fourthly, throughput provides a clear and concise picture of a company's financial performance. By calculating the ratio of total sales revenue to total operating expenses, businesses can quickly and easily evaluate their financial performance. This enables them to identify areas of strength and weakness, make informed decisions, and adjust their operations to improve their financial performance. Fifthly, throughput is a key performance indicator, KPI, that enables businesses to benchmark their performance against industry averages and best practices. By understanding their throughput, businesses can evaluate their performance relative to their competitors and identify opportunities to improve their financial performance. This enables them to stay ahead of the competition, improve their market position, and increase their competitiveness. Lastly, throughput provides a framework for continuous improvement. By regularly calculating and evaluating their throughput, businesses can identify areas for improvement and make adjustments to their operations to optimize their financial performance. This enables them to stay agile, responsive, and adaptable to changing market conditions, and to continually improve their financial performance. In conclusion, understanding throughput is crucial for making informed business decisions. Throughput, defined as the rate at which a system generates money through sales, provides valuable insights into a company's ability to generate revenue, profitability, and financial performance. By calculating throughput, businesses can identify areas of inefficiency, optimize their operations, evaluate the effectiveness of their decisions, and benchmark their performance against industry averages and best practices. By understanding throughput, businesses can make informed decisions, improve their financial performance, and stay ahead of the competition.